on Business Incorporated today. Micro, small and medium enterprises in Africa to get to the $5.5 billion from Global Development Finance Coalition. Teachers threaten to go on strike in Zimbabwe. Unemployed youths to get paid $100 monthly in Algeria. Hello, welcome to the Thursday edition of Business Incorporated on Channels Television. I'm Ini John Mekwa. Well, let's get the show started now with market numbers in Africa. First port of call, major markets were mixed. As intraday, Nigeria's NGX was lower by 0.09%, while the JSE of South Africa was slightly higher, 0.04%. For the EGX 30, it was down 0.52%, while Kenya closed positive. It was up more than 0.5% after trading yesterday. Well, a slightly different picture in the Middle East, where markets we track were mostly negative at intraday. The UAE Abu Dhabi index was in the green, up 0.07%, while Dubai's main index dropped 0.11%. Elsewhere in the region, Saudi Arabia's Tadawul fell 0.37%. Qatar's index was also in the red. It was down 0.08%. Let's move to Europe now. We have Daniel Winter joining us now. We see positive signs from the European aerospace sector. Airbus has locked record profits, biggest ever order book, as airlines buy its latest jets, particularly the narrow-bodied A320 series. Well, Daniel, tell us, is that a sign that the pandemic is coming to an end in Europe?
That's right. The European plane maker Airbus posted sharply higher profits of 4.2 billion euros for 2021. That's thanks to a strong order book, but also because it's finally stopped production of the A380 Super Jumbo, which was a big money loser, as well as reversing some COVID-19 charges. That helped as well. Right now, it's churning out jets and is forecasting it'll deliver 720 planes with even higher profits. Airbus is currently sitting on thousands of orders, especially for fuel-efficient new versions of its narrow-body A320 series, which is typically used on short and medium-range flights. But it's also gratified by orders from Etihad and Singapore Airlines for freighter versions of its long-range wide-body A350 jet. That's taking a bite out of the freighter market, which has traditionally been dominated by American rival Boeing. And despite a very public dispute with Qatar Airways over paint flaking off its A350s, Airbus may have lost a customer, but that's not dented demand for its high-tech jet.
Yeah, and like you mentioned, Boeing, what's happening to Boeing in this picture?
Well, let's hope so. COVID-19 regulations are being eased or lifted in some cases in countries across Europe, although there seems to be a belief that masks are here to stay, sadly, on planes for now, but that might be the price to pay for an uptick in leisure travel. Just a short detour. Short-term rental company Airbnb, for example, logged a record fourth-quarter profit, beating pre-pandemic levels. And going back to aviation, European budget airline Ryanair has bought a large number of 737 MAX planes from Airbus's rival Boeing. Obviously, many things could change that, like the tensions in Ukraine or new coronavirus variants, but the travel industry is clearly optimistic.
And talking about the easing of restrictions or removal in some cases, how's the markets reacting to all of this?
Well, Germany's main index, the DAX, started the day up, but only slightly. It's been a return to form after a major slide on Monday due to the conflict in Ukraine. Russia has made a show of withdrawing a small number of troops stationed in Belarus, which has eased investors' worries slightly, with the potential for war at least delayed for the short term. France's CAC 40 and the broader European stock 600 also rose ever so slightly on opening this morning. However, it's still unclear how sustainable the week's recovery, or at least return to form, can be. The US government has already reacted skeptically to the claim of withdrawal by Russia, noting thousands of troops still stationed along the border and some additional troops even joining them in the past few days. Certainly, all eyes are on Ukraine and will remain there. After all, the wider economic impact on the rest of Europe would be significant.
Yeah, certainly all eyes are there, and we're following the sentiment and the conversations around it. Thank you so much, Daniel. Let's move to the UK now. We have Juliana joining us from our London studio. Hello, Juliana. Good afternoon.
Good afternoon, Annie.
So, former British politician Nick Clegg has now been promoted to president at Meta. Do you see this lessening the regulatory pressure that Meta has been facing in recent times?
Potentially, this is certainly a huge show of confidence by Meta President Mark Zuckerberg. Nick Clegg was the second most powerful person in Britain when he was Deputy Prime Minister under David Cameron. And now some reports suggest that with this new position as Global President of Policy and Affairs at Meta, he is the second most powerful person in Silicon Valley, just behind his boss and on par with the Chief Operating Officer of Facebook, Sheryl Sandberg. Now, we know that the company has faced really tough scrutiny over the past couple of years, especially because it owns so much. It owns so much of the technology that we use, including WhatsApp, Instagram. There was a court order just a couple of weeks ago asking Facebook to pay over £400 million in back fines for its acquisition of GIF. Some people are saying the company should be broken up. So that's why it appears as if Mark Zuckerberg is now stepping away. He wants to focus on new products, and he believes that the skill, the policy skill that Nick Clegg has is enough for him to look after all affairs. So this is a huge win for him, a sad loss for Britain, because now he is based in California.
Yeah, okay. So good win for them. Congratulations. Now, visas offering foreign investors fast-track residence in the UK expected to be scrapped by the government. Why are we talking about this now?
Yeah, this is a pretty serious story, and it appears to be linked to the ongoing conflict between Russia and Ukraine. We know that Prime Minister Boris Johnson has set out a series of sanctions against Russia if indeed they do invade the country. And now there was a report floating around by The Sun yesterday that this so-called golden visa scheme, this fast-track scheme for very wealthy foreigners who want to come into the UK, if you show that you can invest £2 million, you basically get a visa. And now they apparently have been flooded with applications over the past couple of days because of the ongoing conflict. It appears as if Russian businessmen want to quickly get their money out of the Kremlin, and Britain does not want to be dogged down with this scandal, particularly as we know that the current government are already engulfed in so much difficulty. So Priti Patel, the Home Secretary, will apparently shut down this scheme in the next 2 days. And over the past, I believe, 5 years, about 700 Russian businessmen have qualified for the scheme.
And how's the market looking at this time?
Yeah, the market is in a turmoil today. It appears as if NATO suggesting that perhaps Russia is not disengaging at the border has spooked investors. The FTSE All-Share at intraday is down 0.49%. The FTSE 100 is down by 0.56%. And the FTSE 250, the domestic market, that's down by 0.25%. In the currencies market, the British pound is up on the US dollar by 0.21%, also up on the euro by 0.21%, and down at intraday on the Japanese yen by 0.08%.
All right, Juliana, something tells me we still have a lot to talk about the Russia and Ukraine issue in the coming days. Thank you so much. Enjoy the rest of your day.
Thanks, Annie.
Let's move to Asia now. Stocks in Asia Pacific were mixed on Thursday as investors continue to monitor the situation surrounding Ukraine. It's everywhere in the news. The Nikkei 225 in Japan closed almost 1% lower at 27,232.87, while the Topix index shed 0.79% to almost 2,000. Mainland Chinese stocks finished the trading day higher, with the Shanghai Composite rising fractionally to 3,468.04, and the Shenzhen Component climbing 0.34% to over 13,000. The Hang Seng Index in Hong Kong hovered above flatline as of its final hour of trading. Elsewhere, South Korea's Kospi gained over 0.5% to finish its trading day at almost 3,000. Shares in Australia rose on the day with the S&P AX 200 up 0.16% to 7,296.20. MCSI's Broadex Index of Asia-Pacific shares outside Japan climbed 0.38%. In the U.S., stock futures dipped in early trade as investors digested corporate earnings reports, updates from the Federal Reserve, and developments in Russia-Ukraine conflict. Futures saw the Dow Jones Industrial Average shed almost 0.5%. Same with S&P 500 futures, while Nasdaq 100 futures lost. It was down 0.64%. A slew of companies reported quarterly results after the bells yesterday. DoorDash surged more than 27% after hours. Cisco and Applied Materials both added more than 2% in extended trading. The S&P 500 in Wednesday's regular trading session closed a little changed, while the Dow shed nearly 55 points and the Nasdaq Composite dipped 0.1%. The major stock averages came off their lows on Wednesday after the release of minutes from the Fed's January meeting. The minutes show that Fed is prepared to hike interest rates and reduce its balance sheet soon, as investors had already expected. In the oil space now, our oil recovered some of its more than 2% fall in Asian trade on Thursday after Russian-backed rebels in eastern Ukraine accused Kiev government forces of shelling their territory with mortars. U.S. West Texas Intermediate crude was trading down 0.7% a barrel after earlier falling more than 2%. Brent crude was trading down also 0.6% at $94.02 after dropping earlier by over 2%. Oil tumbled earlier after France and Iran said that parties are closer to an agreement to salvage Iran's 2015 nuclear deal with world powers, offsetting tensions over Ukraine. In the commodities space now, prices held ground on Thursday near an 8-month high touched earlier this week as the U.S. dollar and Treasury yields dipped after Federal Reserve minutes showed a less hawkish than feared stance. Spot gold was flat at $1,868.09 per ounce, hovering near its June high of $1,879.48. It hit on Tuesday. U.S. gold futures were down marginally, though, $1,870.30. We'll take a break now. When we come back from the break, we'll go to our commodity space and other stories from the African continent. To stay with us is Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated on Channels Television. Let's go to a commodities market update now. Inventories of some global essential commodities are at historically low levels. This ranges from industrial metals, energy, and agriculture commodities, with problems particularly acute in metals such as aluminium, nickel, and a whole lot more. Now we have Favor, analyst with financial derivatives, joining us from Victoria Island now to tell us what's going on with this. Hello, Favor. Good afternoon.
Good afternoon. Thank you for having me.
Good to have you, Favor. So can you explain what's driving this economic shortfall and what can be done to bridge this gap?
Well, the reason why the inventories are really low is really because there is limited supply. So we are saying that in terms of supply chain, a lot of constraints are happening. So in terms of agricultural commodities, issues such as the bad weather that happened in Brazil for most part of last year actually affected supply of commodities such as coffee. So that really affected inventory levels. And then for metals, which are at the forefront of this commodity crunch, we've seen that metal smelters in Europe and and China are actually reducing their production capacity because of the rising energy costs. So that has obviously affected supply and inventory levels. And again, there are also concerns about the long-term supply of these metals, considering that there is a lack of investment in new mines. So what we can really do to bridge that, widening gap between supply and demand is to, in terms of metals, one thing we can do is to boost investment by incentivizing investors about the opportunities and how they can take advantage of the rising demand there. And also for a lot of companies that are coming out of these COVID-19 shocks, what can be done is to introduce incentives by the government. So for example, in India, they have introduced these tax cuts for palm oil imports. So that way, that would help boost operations. So this kind of incentives can support manufacturers in order to reduce downtime and to increase activities. So I guess that would help push the supply of some commodities.
Okay, so talking about commodities, Goldman Sachs is saying something worrying now, estimating that aluminium stockpiles could be exhausted by 2023. That's just next year. What if this happens? What are the possible implications?
So these industrial metals are critical energy transition materials, but then they also have wider, applications. And so if these inventory levels are exhausted or are really low, which means that supply is limited, that means it implies that we would see continuous price elevation of, commodities such as aluminium. And once the price should increase, that means higher production costs for consumers, automakers, and other users as well. And for people that can't keep up with this rising production costs, they might even lower their production capacity. And once that happens, we are seeing a delay in the rollout of certain final products, and also an increase in this final product. And this just doesn't apply to industrial metals alone, but also commodities in general. So those are the implications of these low inventory levels.
All right, so we see that commodities prices are hitting record highs this year, with coffee Arabica prices up 100%. Do you think that these commodities prices are causing inflationary pressures, or is it the inflationary pressures that are leading to these high prices?
To answer that question, if we go back to what inflation means, which is the persistent, increase in the price of goods and services, and that pretty much means that the movement in the prices of, goods and services will influence the movement in inflation. So that means that if the price of commodities increase or decrease, that will reflect in, the inflation as well. And we've seen that what a lot of economies are doing to actually curb these inflationary pressures is to increase interest rates. We've seen that, the Fed has mentioned that they are going to increase interest rates by at least 3 times this year, and Bank of England has increased interest rates twice this year. So those are the things they can do to, they are doing to curb inflationary pressures. But then if structural bottlenecks are actually driving this inflation, if they are not addressed, we'll see that these inflationary pressures will be consistent and that will affect the consumers at the end of the day.
Well, talking about the cost of coffee going up about 100%, this should also be of an advantage to Nigeria.
Well, yes, it should be, but then for Nigeria, we see that we are actually large importers of coffee, so we can't really take advantage of that global increasing price of coffee. And I think that's where, unfortunately, we can't just take advantage of that.
And
so
then, okay, go ahead.
Okay, so that means increased cost for, chocolate and beverage manufacturers here who have to import stocks for foreign exchange and all of that. So even here, that means local production of these things will actually increase, and the local price rather will actually increase.
And then the projection by Goldman Sachs about aluminium, if it happens, how will it affect Nigeria?
For aluminium, that would mean that if if we are importers largely dependent on aluminium imports, that means would be the people that actually depend on it to be constrained because they have to source for other supplies, other ways, and what the derivatives of this aluminium, they pretty much don't have substitutes. So that is a constraint on our part.
All right. Thank you so much, Favor, for sharing your thoughts with us this afternoon. Favor Ogunroye is analyst with Financial Derivatives Company, joining us from Victoria Island. Enjoy the rest of your day.
And you too.
So moving on now, Global Development Finance Coalition has committed over $5.5 billion for MSME financing in Africa for a sustainable and inclusive recovery of the private sector. The international group of 20 development finance institutions that came together in 2020 has exceeded its initial target by 40%, while DFIs jointly committed $5.55 billion of financing of MSMEs in Africa over the period. In response to the unprecedented global health and economic crisis caused by COVID-19, the coalition recognized the critical role of DFIs play in supporting the crisis response in vulnerable countries. While MSMEs are the economic lifeblood of emerging and frontier economies, they're also more vulnerable to crisis than larger enterprises. In developing countries, formal SMEs contribute to more than 1/3 of gross domestic product and account for 52% of formal employment. Improved access to finance for MSMEs is critically important to boost growth and the prospect of 450 million youth Africans projected to join the labor market by 2050. And teachers in Zimbabwe have been on strike amid the start of a new school term, demanding the government to pay them in US dollars. Teachers are asking for average of 21,000 Zimbabwe dollars. The teachers union are asking their members who could no longer afford to commute from their homes to the classroom. This is a major reason they're asking for this. The government offered the teachers 20% pay increase and other incentives such as free school fees for their children, while the teachers rejected the offer as insufficient. Well, the Public Service Commissioner said that such behavior by teachers continue to be absent from school, with some reporting for duty but not working, cannot be tolerated, as it will have a lasting negative impact on entire generation. The government notes that with concern that in spite of the significant steps it has taken, the teachers have refused to back down. The government of Australia says it will introduce unemployment benefits for young adults as the country struggles with a jobless rate of almost 15%. The payments, which is set for March, will target job seekers aged between 19 and 40, with the aim to preserve the dignity of young people. The government adds that there are over 600,000 unemployed in Algeria. Those who are eligible will be able to collect the payments of about $100 a month, as well as some medical benefits until they find work. The allowance is equivalent to nearly 2/3 of the minimum wage of 20,000 dinars. In addition, taxes on consumer products for beneficiaries will be suspended. And Egypt will locally manufacture components for kits used to convert vehicles to operate on natural gas, either compressed or liquefied, through a joint venture, the agreement with Italian company Landirenzo's, which produces liquefied natural gas and natural gas systems for cars. The joint venture aims to establish and operate an industrial complex for the manufacturing and assembly of compressed natural gas groups for the automobile market. This includes two-fuel passenger vehicles, bi-fuel engines, medium and heavy-duty trucks of all types and sizes, in addition to the conversion of vehicles that run on fuel and diesel to be able to run on CNG or LNG instead. Egypt is working on a host of projects to preserve the environment by making use of the country's natural gas production. The boom in the North African country's gas production has been supported by huge gas discoveries and production in the Mediterranean. That's Business Incorporated for today. Thank you so much for being a part of it. Let's do it again tomorrow. I'm Ini John Mekwa.